Hello, everyone, and welcome to episode 20 of the Pollination Podcast. Today I'm going to be going over loans and subsidies for those of you who are interested in starting or growing your beekeeping business. Hi, everybody. I've gotten a lot of questions about how we started the business from a financial perspective. I've gotten a lot of questions about grants and subsidies over the years. Those are things that I have a little bit of personal experience I can give about the loan. And I'm going to share how we started the business basically, and the subsidies and the grants. I've just started stepping into those here recently. I think some of them we just signed up for last year. I just recently signed up for a couple new ones, I think just in the last couple of months. So I wanted to share that information with people because I think a lot of it's not really broadcasted well. I think some beekeepers are, I don't know if they're embarrassed to say that they get government subsidies or they just don't want to share it for competition reasons. I don't know. But I know for years, nobody told me a lot of these things, or if they did, it wasn't really specific. I didn't know exactly where to go to sign up for these subsidies or the loans. I didn't know, anything really, honestly. So I wanted to share what we're doing. I am trying to get an interview with someone from the USDA, actually from my local farm service agency branch here in the neighboring town. I've been trying for a few months, and it seems like every time we're supposed to meet, they have to reschedule. So I've had this episode in the works for probably close to 6 months, but I was waiting for someone who was official to come and share these things because I've always been a little hesitant to give out too much financial information. Because I don't always fully understand everything myself. I'm still very much learning, but I want to share at least what I'm doing in my business, and I just want to be clear that some of these things, these terms I'm giving out, or like dates for the sign up, all these things may change. They may not necessarily be accurate. It's my understanding, and I'm definitely not an accountant or anything, so I don't work for the USDA. So the best thing to do is take everything I'm saying here with a healthy dose of salt skepticism, and just contact your local farm service agency branch and get all the information from them. And I will tell you another thing is that all the loans and stuff I'm about to talk about, the USDA changes like the paperwork, the terms, conditions, the interest rates, the forms themselves completely change every single year. Every year we kind of have to start from scratch with our applications. I can retrieve some of the data. I can get a copy of my old applications is what I mean from the previous year, but I always have to kind of start the applications over, and everything's kind of changed a bit. That's really frustrating. I guess that's just a government thing. They're constantly updating their documents, which sometimes they don't change anything, but so the information I'm giving may not be super updated, super accurate. That's what I'm trying to say. So contact your local farm service agency branch or some of the other companies that I'm about to give. And I just want to share some of this stuff and what we're using. And hopefully it'll be helpful for you guys too. I've had to pull up a lot of the terms and conditions and stuff from like the USDA's website. So I'm going to be reading that on the screen to make sure I don't mess up too bad about what I'm saying. But if you're interested in starting a commercial apiary and you maybe just don't have the capital to start, like I didn't, I was completely broke when I started my business. I had nothing. I had like an old beat up car, a couple suitcases, and a 5-gallon bucket full of old rusty tools. I had nothing. And, within, I guess 8 years now, I think it's been eight years or so, we're running 2,000 hives. I'm doing it. This is my second year running the business full time. We are still juggling a lot of our startup loans and startup debts, and that's just how it is. When you don't have money to start a business, you take out loans and you make payments, and that's where most of our money goes to, is just paying these loans, just to be honest. But there are some subsidies you can get, both from the government and from private agencies. I'm going to mention those, what we're doing, and I'm going to try to post a lot of this on the video here. I'm just starting to add video to the podcast, so it's a bit of a learning curve for me to try and edit all this. So bear with me if the editing's a little rough, the video's a little rough. I'm trying out a green screen so I don't have to move my bookshelf, reorganize the whole living room. So Yeah, be patient with me as I'm kind of learning to do this, and I think it'll be better to have the video option if people want to read some of these things. I also am going to just try to read it myself because I also want the podcast to be audio only. Just if you want to watch video, it's here. But that's my little preamble, so I'm going to go ahead and jump into the microloan program from the USDA, and we'll go from there. Okay, the first thing I'm going to talk about was my very first loan we took out. I took this out, I don't know, maybe a year after I had started working on a commercial apiary. It may have been a little bit earlier. I don't know. It may have actually been earlier because if you don't have a certain amount, so many years of experience, you'll have to get like a mentorship letter for them to approve you if you're kind of new in your farming field. So they want you to have basically an experienced person. In this case, it would be someone who had many years of beekeeping experience and was willing to like mentor me, which was a guy I worked with. He was a retired state bee inspector. He was really nice. I called him anyways. He really was my mentor. He just had to write like a letter for me to get approval because I was so new to the beekeeping field. The USDA wanted someone I could reach out to if I was having problems, and that I wasn't just jumping headfirst into the endless void that is beekeeping, the endless financial void anyways. So what the first loan we took out was a loan called a microloan, and the microloan with the USDA is pretty easy to get. Again, I had to have the mentor letter. Of course, I had to, I think we had to open up like a bank account with the business name. The business had to be, it had to be a registered official business. We had to register it as an LLC. And, you had to give, I don't know, a couple years of financial history, something like that. But honestly, it was pretty easy. I was making like, what was I making at Sleep? I was making like $12 an hour working at Sleeping Bear, 40, 50 hours a week. It was not much money. And I was able to secure this loan with that level of income. I was making like $400 a week or something over there, $400 or $500 a week. So the income requirements to get this loan was pretty low. And it's a lot of paperwork. I will say that for the USDA, there's two complaints I have. Number one, it's an ungodly amount of paperwork. Just go ahead and just imagine an encyclopedia form. And I'm exaggerating a little bit, but that's kind of how it feels. It's just a massive amount of paperwork. A lot of the papers you can skip depending on your situation. And the other thing is they are dirt slow when it comes to processing applications. They're pretty good about emailing back and forth, but when you turn in an application, sometimes it can take months. They will process your loan applications kind of in the order that they're received. So if there's a lot of people applying for loans ahead of you, you can take a while. They've started this new thing here recently, I've noticed, where they will send out your loan applications to other branches where they have trainee loan officers so that they can sort of practice and learn. But of course, they're new loan officers, so they can take a long time to process it. You can, what I do, and maybe they just do it as a favor to me, I'm not really sure, but I'll just say, hey, I need this loan ASAP, and they'll process it like in-house is what they call it. So usually I'm dealing like with the same one or two ladies that are processing our loans. They're pretty fast. They know our situation. I've worked with them for years. But even then, I mean, it still is going to take, usually takes us at least a month. Sometimes it can take more depending on, if they want more or less financial information. I've gotten a lot better at accumulating all my financial information and organizing it correctly now because I have to submit it every year that we take a new loan out with the USDA. So I kind of know what they want. And, we also have to do that for our accountant. So if you can start organizing yourself, and, your bank statements, credit card statements, make sure you have all your, like, how much honey you produce, nukes you sold, queen cells, mated queens, all those things you're purchasing or that you're selling. You'll need to know profit margins on all this stuff. They're going to ask for all that information. I mean, just everything. And when you're starting out, that's very easy. You may not be producing anything yet or producing very little. In the beginning, I think all we really were doing was selling 1-pound bottles of wildflower honey on the back of my pickup truck on the side of the road, and we sold some nukes. The nukes were like our first big income stream. So it's definitely easy to start out with. As you get bigger, it definitely become a little bit of a pain in the butt, but you should be taking care of those things anyways if you want to run a successful business, in my opinion. But that's all that to say is that they take a long time, and just don't go there and be like, I need money. To, like, you can go to your private bank, and I've gone to my local bank sometimes here, and I can have a loan approved and the money in my account in like 24 hours. And I've had to do that a couple times because I needed, so like we needed an uncapper, whatever it was a couple years ago, and a wax separator. Our honey crop like quadrupled or something from like the previous year. I was not prepared for it. All we had was this little tiny, I don't know, 56 frame extractor. We were hand scratching all of our honey frames. It was already kind of a nightmare. And then we had this massive honey crop and we needed to extract it. I did not have time to go to the USDA. So I went to the private bank, my private bank, and I had the money in like 24 hours. I was able to order the machines. You're going to pay a higher interest rate by going to a private bank, but in the turn, and your repayment dates are usually a little longer. I find my bank wants me to pay something back in like a 4-year term. The USDA, you can usually take loans out for 7 years. So it takes longer to pay off, but it'll really drop your payments. And when you're starting out, that's really handy. But like I was saying, you need to plan that out months ahead of time. If you're even thinking about taking a loan out, just go up there and start talking to them. Get a copy of the application so you can see what you need. There will be you'll be going back and forth to that office, emailing, phone calling, especially for that first application. So long way of me just saying they're slow, but they're really handy because they have these really long repayment dates. They have some insurance I'll be talking about later that's free that will actually pay back your loan if you lose some hives due to natural disasters, or if your honey crop gets damaged due to fire, drought, or flood or something. That insurance will go directly into your loan payment, into the principal of your loan payment. I'll talk about it later, but I didn't even have to make one of my loan payments for my truck, trailer, and bobcat this year because we lost some nukes due to some flooding. One of my bee yards overflowed and flooded, and I just completely wiped out like a $10,000 payment, just to be honest with you. But I'll talk about it in a little bit. That's Elap. For the micro loan, I'm going to make sure I read this here. Micro loans are limited to a maximum of $50,000, which honestly, if you're brand new and you're starting out, that's more than enough. Our first loan was probably about $25,000 or something like that. And I think we had a 5-year repayment period, so I was making like $5,000 a year payments. If you have a hardship, so if you have a bad year for a variety of reasons, the USDA is very flexible. You can extend that loan up to 7 years, if I remember correctly. I haven't had to do that except for our truck, trailer, and bobcat loan, which is a different type of loan. And I asked for a long repayment period from like day one. But typically, you want to take out a micro loan, they're going to want you to repay it in like 5 years. But again, I think you can talk to them about that. $50,000. Let me read here and make sure I'm reading all this correctly. Yeah, the micro loans are limited to small beginner farmers and niche non-traditional farm operations. That's definitely beekeeping. We're pretty niche. You can use all kinds of things. This loan for all types of things. You can actually use it to put a down payment on a farm. You can build, if you need to build a honey house, stuff like that gets covered. We used it to buy farm equipment. We used it to buy beehive equipment like, boxes, lids, frames. I think we bought our extractor, stuff like that. Real just basic level stuff, some pallets. And I don't even know what we bought with it at the time. Probably I think I bought enough equipment to run 200 double deeps plus honey supers. And the idea was that we could split them all down to singles and run 400 colonies and pallets and stuff. And we threw in some of our own money too to make it work. But back then, $25,000 was quite a bit of money. Nowadays, with the price of lumber, that's not going to get you so far. But I swear I remember paying like $8 per deep box or something, all those 8 years ago. So the microloan's really handy. That's something you're going to look at if you are just starting out. And honestly, if you just need a loan that's under $50,000, that's where you're going to want to go. There are larger loans you can get. I believe they're called direct loans. And those, I can't even remember the limits on those. I don't know if I have that written down, but it's way higher. Probably you can go up to like $100,000+, I would suspect. The direct loans are really, really for like when you're trying to really expand the business more. But if you're just starting out, go with the micro loan. That's a really good thing. And then, they have some eligibility requirements here for the direct and the micro loans. Yeah, there we go. There's one about using a mentor. So you have to choose a mentor, and the FSA will review that mentor. They never called my mentor, from what I can remember. Let's see. Collateral requirements. They may want you to put collateral down. I didn't have any collateral when I took out the loan. I don't think I had nothing. So they seem to maybe be a little flexible on that. Credit score. I did have an okay credit score when we took this stuff out, but it was nothing substantial. Let's see here. That's it for the two primary loans. The micro loan is going to be sub 50,000. If you want over 50,000, you're going to want to go with a direct loan. There is another type of loan. They call it a farm operating loan. Sometimes my loan officer calls it what does she call it? An annual operating loan or an annual crop loan. Those have really high limits. I can't remember what it is off the top of my head, but I'll tell you right now, we take out $75,000 every year. And it's what that kind of loan is. This farm operating loan is a like a line of credit with a bank, but it's a non-revolving line of credit. So say I take out $75,000 this year and I spend it on syrup and trucking, and I were just to pay it right back off. I don't have that $75,000 to pull from again. It's like a one-time loan. The nice thing with that loan is you don't pay any interest, any fees, anything whatsoever until you draw from it, and then you'll pay whatever the interest rate was. The interest rates right now with our most recent loan was pretty high. It was like upwards of 6% interest. That was the same as what my private bank was giving me. But when we first started the business, the interest rates were like 1 to 1.5%. So because obviously it's subsidized by the government. So hopefully that will come back down. That's something to look into, because right now it's like, why go through this huge headache with the USDA, all that paperwork when they're giving you the same interest rates? There are some good reasons to do it, like the being able to extend your payment dates, from 5 to 7 years. Your insurance that I'll talk about that can cover it. But anyways, it's a handy thing to have. What we use it for is we cover I take out $20,000 for each syrup truck. That's about what it costs to buy a full load of corn syrup. We go through about 2 loads of corn syrup per year. This year is the first year we went through 2 full loads. The previous years, I think we've gone through like 1.5. But seeing how much the bees have improved, I think we're just going to budget from 2 going here forward. So you're looking at $20,000 per semi truck of corn syrup. I ordered 2 trucks. That's $40,000. And then you're looking at not quite $20,000 to send a semi to and from California, but close to it. All in all, and the syrup trucks is also slightly less than $20,000. So what I do is I take out $75,000 as a farm operating loan every single year, and it doesn't cost me anything other than the paperwork. And the paperwork's a lot of paperwork. It takes at least a month to get approved, even though we do it every year. Now that I've gone through it the first time, I will just request my previous year's application, so I can copy over a lot of the information. Of course, you have to update your financial information. And of course, the USDA changes the forms every year, so some things are on different pages. But it's much faster once you've gotten that first loan approved, because there's just a lot of nitpicky stuff that you can just copy over that doesn't really matter too much. So what the cool thing is, if something happened and I didn't need all that money, like say, I don't know, we lost half the hives and I only needed to buy 1 semi of corn syrup, and I was only going to send 1 semi load of bees to almonds, then I would only use, like 40,000 of the 75,000. And that rest of that money would be sitting there. It'll stay there, if I remember correctly, for a full year. And if you don't use it, it doesn't cost anything. And all you have to do is just give it back to the USDA. You just sign this document and say, hey, I release the funds back to you. And you're off the hook for that money that you didn't take. There's no negative side of taking it out. And they'll tell you, just take extra. If you're like, I think I need 50, take 75. It's fine, as long as you have the financials for them to approve it. As my understanding of it is, there's no negative financial side to have it. And in fact, even though we didn't use all of it last year because we just sent 1 semi to California and I only ordered 1.5 trucks of syrup, I had a little extra money in that crop loan, and that crop loan kind of saved my butt, to be honest, because last year was my first year in business running full time, And I didn't, we just had doubled from 1,000 to 2,000 colonies, so my expenses basically doubled. I was trying to learn how to run that many colonies by myself. And it was just the first year in business. We were doing all kinds of new things, like trying to raise cells and queens and sell more nukes. And there was a lot of things. I ended up losing a lot of hives. I had a lot of problems. It was just a learning curve at the end of the year, at the end of the day. And I had to pull some of that money to make ends meet. So I don't know. I had to take out like $10,000 from that operating loan, just to be honest, just so I could pay my bills. Not the business. The business was doing okay, but I didn't have any money. The business couldn't afford to pay me. I was going to the food kitchen and stuff here in town trying to make ends meet, and didn't go anywhere, didn't do anything, walked everywhere I could. It was tough, but that's the first year in business, I guess. We're doing much better, thankfully, this year. But because I had that little extra money, I was able to draw from it. Now, the downside is you got to pay that money back. So, of course, this year, thankfully, we're doing better. I made enough money with the business that I was able to pay last year's farm operating loan off. And we have not had to I haven't found myself in that situation this year, thank goodness. But what I do is I take out that loan. It covers 2 loads of syrup and 2 semis to California. Like, as of this moment, I don't know if I'm sending that second semi to California or not. I'm right on the edge of doing so. But if I don't use it, I'm just going to give that $20,000 that I took out back to the USDA. And that's perfectly fine. So that's what I'm doing. I hope eventually we can wean ourselves off having to take out this money. But, I would like the business just to be able to pay for everything up front. But realistically, only being the second year for the business being full-time, that's just a lot of money for the business to cough up when we're still trying to get on our feet and we're still paying off our original, we've paid off our first loan, but we still have a few loans left with the USDA that we used to start up with and then to buy all our machines and stuff. So I'm having to just pay a lot of loan payments. So we're still working on trying to get off these farm operating loans. But it's a really good option to take out. And you can, for things that you project you might need next year. And it's definitely good, at least so far in my experience, to take out more than you think you need. They're quite handy. And I'm looking here at the terms, and they say the maximum loan amount for a farm operating loan is $400,000. So, again, if we're talking you're a fairly new beekeeper, that's way more money than you need to take out of. But you can see where you have a lot of options. If you were to take out a farm operating loan and, invest it, to grow more hives or something, you could always gamble that you could pay it back the next year. But you got to be really smart. You don't want to put yourself too far in a financial bind or just start taking out money if you can't pay it. It was definitely tough for me to pay back that $10,000 that I took out last year to live on. I'm glad I could do that, but it could have gone the other way, and I could have not been able to pay it and could have had to take out more debt, just to keep things running, and you can find yourself going bankrupt real quick. I took an educated gamble, is how I'll describe it, and thankfully my gamble played off. I don't want to have to do that again. I'm not advising anybody here to take out debt, take out loans if that's not necessary. I just want you to know that it's an option, and that's what I'm doing. And I find, at least for syrup and transport, those are things that can vary quite a bit for me. And I like knowing that the bees will have food, and I like knowing that I can send them to California, even if I can't set aside enough cash throughout the year to pay for those things directly. It still leaves me the options of, taking care of my colonies and sending them to California. Okay, since I just briefly touched on the 3 main loan types, the ones that I have an understanding of now, the USDA may have more. These are just ones that I've personally used and had experience with. That's microloans, sub 50,000. You got direct loans that are over 50,000, and then you have your farm operating loan. I call it my annual crop loan, is what I call it. That's a non-revolving line of credit. That's very handy to have. We use a combination of all 3 of those loans pretty regularly. And now I want to talk about the subsidies that you can get. And I'm going to call some of these are not called subsidies, but they're called insurance. I'm going to just read the form here so I kind of make sure I get everything correct. But I'll tell you right now, this first program is going to be Elap. I've signed up for that, and it's been fantastic. I only regret not signing up for it years earlier. I will say that if you take out loans with the USDA, they will require you to have Elap on your bees, the Elap coverage and the NAP insurance coverage, they won't make you get it at first, but after like 2 or 3 years of doing business with them, something like that, you will be in non-compliance if you don't have that insurance, and it's free. There's no reason not to have it. They will also make you fill out this like massive textbook. It's like a farm class. It has nothing to do with bees. I think mine was about like running a dairy farm. It was a real pain in the butt. It took months to fill it out. I put that off for like 2 or 3 years, but they will make you fill out this massive, I don't know, it's like some kind of like your first time farm guide, but they don't have anything on beekeeping. So I chose how to be a dairy farmer. So I guess I learned how to, milk cows and to sell my milk and stuff. There were some things that were just general purpose farm tips, but I don't know. I found that honestly to be completely useless, but they will require you to do it. I'm not advocating for anyone to do this, but I have heard a rumor that some people will just hire someone to take that test for them. And it's a massive book. But at the end of the day, the USDA just wants everything to be filled out because the government just wants to be able to check that little box on your form to say, okay, he's done his farm course. He's got ELAP, he's got NAP. Now that I've done all those things, I am in full compliance. So they're happy to give me my loans. But anyways, this is ELAP. It's called the Emergency Assistance for Livestock, Honeybees, and Farm-Raised Fish. We're not talking about fish here. This is a beekeeping podcast, so we'll focus on the honeybee stuff. And I'll just read directly what they say. They say this is emergency assistance administered by the Farm Service Agency, which is a branch of the USDA, offers financial aid to producers who suffer losses from specific adverse conditions not covered by other USDA disaster assistance programs. This disease includes losses due to disease, certain adverse weather events, and other qualifying conditions affecting livestock, honeybees, and farm-raised fish. Basically, let me just finish reading this here. It says, who is eligible? Eligible applicants include producers of livestock, honeybees. Basically, if you're a beekeeper, you're eligible. They do have some, and here's an issue I ran into with this program, is there's cutoff dates. There's dates where you can sign up, and then if you don't sign up, you're kind of stuck for, till the next year or something. That was very frustrating. I did try to sign up a couple of times, but every time I went up there, they're like, our sign-up window's closed. Try again, on another date. They don't list those dates. I can't remember what they are, but contact your local FSA branch, your Farm Service Agency branch, and they'll give you those dates, because you may have already missed that window to sign up on. Let's see. I'll go over how it works. The covered losses for honeybees are honeybee colony, hive, and feed losses due to colony collapse disorder. Yeah, they consider colony collapse disorder a thing. Eligible adverse weather and other conditions. So I use this pretty extensively now. And once you sign up for it, they've changed the form. It's a lot easier. It's just this form where you're going to write down every month. You have to submit how many colonies do you have that are currently alive. How many have you made that month or in the previous month? How much have you lost this month or in the previous month? And you need to write down where all of your colonies are located. So like in what county? You don't have to list every single bee yard. They'll say for me, they'll go, well, how many hives do I have in Washington County or Holmes County or Bay County? For me are the counties that we kind of keep our bees in. And I'll say, okay, I've got 500 in Washington, I've got 500 in Bay, I got 200 in Holmes, whatever. That's all they really care about. And I'll say, hey, I made 500 splits this month, but I lost 200 hives. And they'll want to know why you lost the colonies. Most of the time, it's just for something that's like not eligible loss. So, whatever. If the queen died, they swarmed, they absconded, something like that. But if it's an eligible loss, which is any sort of natural event, we're talking, for me, it's flood. That's what I have a lot of problems with, is flooding will be covered. Hurricanes here in Florida are covered. Tornadoes are covered. Fires covered. Those are the big ones. We have had hurricanes where the hives have been blown open and lids blown off. They got rained in. All that's going to be covered. Every year, the USDA will determine the value of an individual colony. And there's a I can't remember exactly. There's a calculation that they will use. They'll find out the the value of that individual colony, and I don't know. I can't go into it. I can't even remember. But there's the calculation they used, anyways. We got about $120 per colony this past year, just to give you an idea of what they're talking about. At the end of the day, after they did the calculation, they took out this and that. Who knows what it was? I can't remember. Maybe I can find the form and post it on here. That would be handy. The cool thing is, and I just found this out recently as well, that if you're running those mini styrofoam mating nukes, like I just started running this previous year, those little styrofoam boxes, the USDA still considers that a beehive. So like we lost a lot of those minis to like a bad hurricane we had because they're made out of styrofoam. They weigh like a fraction of a pound. So they just blew them off into the trees. The USDA will still pay me $120 for losing those colonies. The same amount they would pay if I lost a 20 frame double deep, colony. It's worth the same to them. And how they called a colony, as like a beehive that has a queen and workers and brood and honey. Well, the minis all have that, right? It's really a beehive. It's just super tiny, even though really it's a temporary hive. And I told them all this. It's not a secret. Because I had to ask them. I was like, does that count? And I was like, no way they're going to count these miniature hives as full beehives. But they did. They had to pass it up the chain, and they had to go somewhere high up in the corporate office or whatever. And they did count those as full colonies. So if you want to run mini mating nukes, you're totally covered under the Elap program. Now, the colony collapse disorder, I'm not going to lie, I'm pretty skeptical that colony collapse disorder is a thing. I know that it's a multitude of issues. You got mites and monocropping and pesticide and herbicide and blah, 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 and all this stuff. And they kind of wrap all those little variables that are causing issues in the colony. And when a colony is lost, they'll kind of call that colony collapse disorder. So it's a general overview of that your hive died, and it's a multitude of factors. To me, there's always a reason your hive died. You may not always know that reason, but as you gain experience, I think most of the time you can make an educated guess. There's no mysterious force called colony collapse disorder where the bees vanish. No, there is a specific reason, and probably a multitude of specific reasons that happened. So I don't like colony collapse disorder just because I think it's kind of a cop-out for beekeepers who mismanaged their colonies, made a mistake, maybe just lacked the experience to know why a hive was lost. That's my opinion. Now I'll tell you right now, the USDA feels totally the opposite. They think it is a real thing, and they consider like colony collapse disorder to be. I'll have to pull the form up. Maybe I can show you guys. I got to find all my checklist and stuff. Okay, I'm going to read off what the USDA considers to be colony collapse disorder, also known as CCD, what they will cover under the Elap program. These are some symptoms they consider, and if I couldn't find it on the form, but I swear I remember my Elap person that I deal with, Elap officer, telling me that there had to be at least 3 of the 5 symptoms, if I remember correctly. But double check me on that. It's definitely not just one of them. You have to have a multitude of them. So there's a little checkbox on the form, and I'll post this on here. So if you're watching, you can see it. Colony collapse disorder, observed symptoms. Check all that apply. Number 1 is the loss of live queen and or drone bee populations inside the hives. Rapid decline of adult worker bee population outside the hives, leaving brood poorly or completely unattended. Absence of dead adult bees inside the hive and outside the entrance of the hive. Absence of robbing collapsed colonies. At the time of collapse, Varroa mite and Nosema populations are not at levels known to cause economic injury or population decline. So you're supposed to notify anytime you witness these symptoms, and they've told me before they're going to want to see receipts for things like to make sure you've been buying sugar. They're going to want to make sure you bought some type of Varroa mite medication like Apivar. I know I have to submit that stuff to them all the time. I've also been told, and I'm not I don't fully understand this, but they've also told me that Elap will cover loss of feed. And that, from my understanding, was like if you got, a semi-load of corn syrup sitting out in your yard, I don't know, and fire comes and melts your container and it splashes everywhere and you lose it all, Elap will also cover some of that, but double check me there. But Elap is just a wide-ranging program. I mean, it covers all kinds of stuff. It covers the CCD. It covers really anything for the natural disasters that's going to impact your colonies. In the colony itself, that's what it's covering. There's another program I'm about to talk about called NAP that will actually cover your honey production. And I've only recently signed up for it, and I haven't taken out, I haven't drawn any money from that. But Elap, we lost 100 nukes or something in one yard that got flooded this year. $120 a nuke, that was $12,000. So that's why I didn't have to make my truck trailer Bobcat payment, which was about $10,000, is what we pay per year for those. So losing those colonies, which, they were worth more to me alive, but it was still nice to get that check. And, actually when you have a loan with the USDA, you're not going to get a check. They're going to get the check. And if you have an outstanding loan balance with them, it's going to go into the principal of the loan. But I haven't done this yet, but I was told that if you're caught up with your current loan payments and you have a loss, you can request those funds be put into your bank account. But I've not tried that myself. We tried to do it this year, but it took them so long to process all this stuff that by the time I was going to get approved for Elap, our next loan payment was due, so it just went into the loan payment, which is where it was going to go anyways. They will require you to lose a certain percentage of your colonies every year that they consider normal. I can't remember what normal mortality is how they describe it. I can't remember the exact amount. It's like 20% or something of your colonies a year. Like they're not going to pay you for that 20% loss until you go beyond it. But of course, anybody who keeps bees, they know the average loss is like 40-50% every year anyways. So you're guaranteed to hit whatever that minimum amount is, which I think is 20%. So that's not really an issue. You'll have that normal mortality just being a beekeeper. Okay, so now that I've touched on Elap, I'm going to touch on NAP. NAP is Non-Insured Disaster Assistance Program. Again, I just signed up for this last year. I haven't made any claims with it. I know a friend of mine who uses it pretty regularly. I know he made a big claim because we had a bad drought last year, which was one of the reasons we lost so many colonies. And he was able to say that he lost a lot of his honey crop and got some of it back. So the Non-Insured Disaster Assistance Program, NAP, offers financial support to producers of non-insurable crops, so that's honey, to protect against natural disasters that result in lower yields, destroyed crops, or the inability to plant. That's not going to impact us. Who's eligible? Eligible crops include those for which federal crop insurance is not available, such as, I'll just say honey. I'm not going to, they cover a lot of stuff, but for us, they cover honey, which is really handy. They also have a really specific sign-up window that I don't know what it is, same as with Elap. So if you're thinking about doing it, go sign up, because guess what? This doesn't cost you anything except for a little bit of paperwork. And the NAP paperwork was even easier than the Elap paperwork. So how to apply. To apply for NAP coverage, producers must submit an application for coverage and service fee by the application closing date for their specific crops. In the event of a loss, producers must also be able to file a notice of loss and an application for payment. That's the exact same thing as Elap. If you lose something, there's a form. You got to say, okay, I lost X number of colonies due to flood, due to hurricane, due to whatever. And then you just submit it. And at least for me, it'll go to like this, they call it a council. And the council will look at it. And if it's something they decide that is an approved loss, they'll approve it. But I don't get any money. I have to file another form to request those funds. And I don't get those funds until, again, I've lost what they consider to be the normal mortality for the Elap. So it's something very similar with the NAP. You just have to submit a form to say, hey, I'm going to lose this honey crop. I think the honey crop is valued at this much. Here's what I noticed. The office did tell me they will go online and like look at the local weather patterns to see if there was a flood, if there was a hurricane. I know with Elap, they generally want you to take pictures of the colonies. Like when our colonies got flooded, I ran out there, even though I'm trying to like pick up, the nukes and stuff and move them out of the way, get them out of the stream that was running through the whole stinking bee yard. I had to stop on my cell phone and take pictures. I took a quick video. They're going to want to make sure you have the dates and the timestamp on those videos. So don't, make sure you have all that updated on your phone. If you have the GPS turned on your phone, they're going to want location data. Anything that, makes it look like you're not committing fraud, basically. So the more proof you have, the better. The more pictures you can take, the better. Just think about that. It's really tough, obviously. You see a bunch of your hives getting wiped out to think, oh, let me stop and probably in a severe storm or fire or something in a hurricane, snap pictures. But honestly, do it because you'll be happy later when you get paid. So same thing with the NAP coverage. If you're like, man, we haven't had rain in X number of time. I noticed it today or I noticed it 2 weeks ago. Right, at least write that date down. Screenshot the Weather Channel app on your phone or whatever that's showing, hey, that we haven't had much rainfall. Every bit of data you can collect where you see there might be an issue can help you when it comes to requesting those funds. The less accurate and less detailed you are about all of these problems that can occur out in the bee yard, the more likely that they can just say, hey, we're not going to give you money. Although I will say I have not had any problems getting approved for Elap, which, I don't know about the NAP thing. So how the NAP program works, let's see, you have catastrophic coverage, provides coverage at 50% of the approved yield and 55% of the average market price. So I believe that's what I have. If you're a beginner farmer, and I believe the USDA considers you to be a beginner farmer in your first 10 years, or if you're a socially disadvantaged farmer, which that's a woman in their eyes, if you're a female, you're going to be covered forever. If you're disabled, you're a veteran, I think those kind of things, they'll just cover you forever. If you're like a male and you don't have any disabilities or anything, they'll cover you for 10 years as a beginner farmer, and you get a lot of benefits. Like the NAP coverage actually costs money unless you're in one of these socially disadvantaged groups or you're a beginner farmer. So I don't know, I've been beekeeping for 8 years, so I've got a couple more years where I'll be considered a beginner farmer. So this NAP coverage for me is free. But once I'm in my 11th year of beekeeping, I would actually have to pay for this coverage. But here's the other thing, because I'm married and because my wife owns half of the business, it doesn't have to be, some people say 51%, it doesn't have to be. We own it 50-50 because the government considers females in the farming world, in the agriculture world, to be socially disadvantaged. We will have this coverage forever unless they change the rules for free. So if I understand it correctly, and again, I haven't filed for it, but my understanding is I will, half of my honey crop, so let's say we make 20 barrels of honey a year. Half of that crop is protected. So 10 barrels of honey is protected at 55% of the average market price. I think they take the average market price. I'm not positive, but I believe they take the national average price. That's what we set our honey to when we sell it by the barrel. Like, so when we harvest our honey this summer, the national average for the honey crop is $2.80 per pound. So they would give, let's just make, say, $3, so I can do the math a little easier in my head. So they would give, if the price of honey was, the national average was $3 per pound, they would give you $1.50 per pound at 10 barrels if you made an average every year of 20 barrels. That also means you have to report every year how much honey you make to them. And it's pretty easy. I had to do it recently. I literally just emailed the branch of that USDA and I said, hey, this is how many pounds of honey we made this year. And that was it. There was no, I had no invoice because we used to sell to the big honey packers, so I would send them an invoice of how much honey we sold to those guys. But this year, since we're selling it all off ourselves and trying to bottle everything, I had zero written records. So I just gave them my word and said, hey, we made this much honey. And they were fine with that. So they're not too picky when it comes to the amount that you're declaring. Honestly, it's the same thing with the Elap. They don't come out there and inspect your hives. They don't send an inspector to go, let's count every hive. You just say, okay, I've got 2,000 colonies. And they go, okay. And so they base everything off that stuff. All of this stuff really is self-reported. The only time they've gotten really finicky with me when it comes to anything, when it comes to numbers and stuff, is when I'm requesting money. Then they want a little more evidence. But otherwise, honestly, it feels like these Elap and NAP programs are like on the honor system, which means it's ripe for fraud because some people are going to cheat. But don't do that. It's committing federal fraud. That's probably a terrible long prison sentence. But so don't stress over too much if you don't have the best records when it comes to this stuff. They seem to be pretty laid back about it, but the more official forms you can have, of course, the better. So NAP seems pretty good. Again, I know they'll cover anything that's like natural disasters. So drought is definitely one of them. Of course, fire is one of them. When I lost all my and then when we lost those 100 colonies due to the flooding and the hurricane at the beginning of the year, and a lot of that comb was damaged. Obviously, I mean, it was flooded, it was ruined and mold. I had to scrape it all back down the foundation. I didn't know this at the time, and I think we weren't signed up for NAP yet, or we had just signed up. They did tell me that if you lose your comb, that will obviously it will impact your honey production, right? If you have to scrape everything down the foundation. So they told me if you lose colonies in a fire or flood, you can get that Elap coverage, your Elap payment, but then you can double up with it with the NAP payment, because number one, you're going to have fewer colonies, right, to produce your honey crop, and number two, you're going to have less comb for the bees to fill, because it costs so much. Obviously, it costs a lot of honey for the bees to produce the wax to be able to store the honey. So you can double dip in these coverages, and I haven't done that yet. If I have an issue, you better believe I'm going to do it this year. But a friend of mine is doing that, and I found that out recently. So that's something to think about. So make sure you go ahead and sign up for both programs. Let's see here. They do say there is a service fee. Producers must pay a service fee of $325 per crop per county, not to exceed $825 per producer per county. Okay, so anyways, the service fee is going to be not an issue if you're a beginner farmer, you're socially disadvantaged. Now, here's the cool thing is they do have higher coverage levels. So that 50% of the approved yield and 55% of the average market price it's either it's the cheapest coverage option they offer, or it's the free version if you're a beginner farmer, you're socially disadvantaged. I think you can get close to, let's see, the maximum coverage, I think they're saying here, covers 65% of the approved yield and 100% of the average market price. But you're going to have to pay that service fee to get those higher rates. Then you're paying, it's more like a private insurance at that point. So I'm just signed up for the free version. You should at least sign up for the free version. And if you're taking loans out, you're going to have to sign up anyways to be in compliance with the USDA. But both good programs to sign up for. It literally costs you nothing other than a little bit of paperwork, some decent record keeping, and that's it. And honestly, you can do 99% of this through your email. I mean, you don't even have to go into the office once you've done the initial sign up and you've gotten through those first few forms, and then it becomes pretty easy. Honestly, the ELAP's it's one paper that I submit to my ELAP officer every month. It's one page. I just say, okay, I had this many colonies, lost this many, made this many are eligible loss, this many are not eligible loss. Here's the counties the hives are in. I take a picture on my phone, I email it to her, I do that once a month. Boom, those hives are covered. Costs nothing. The NAP thing, honestly, is about the same from what I've looked at the form, although I haven't submitted it yet. It looks just as easy, if not easier, than the ELAP, and the ELAP's already extremely easy. So go ahead and sign up for this stuff if you want to. And now I'm going to talk about a new program that I think just came out and has already closed. So it's not going to be really effective. Nobody's going to be able to use it, basically, if you haven't signed up for it. But I just want you to know about it in case they reopen it. And I want people to know that there's a lot of little programs that come out, and they have short time windows when you can get these grant subsidies, and then they're closed. And once you've started doing business with USDA and you have loans and you're signed up for ELAP, you're signed up for NAP, they're just going to email you anytime a new program comes out. This new program, I just got an email and said, hey, do you want to sign up for this program that's literally just giving you free money? Somebody's paying for it. I'm paying for it. Taxpayers are paying for it. Do you want it? And I was like, yeah, what's the downside? And they're like, nothing. I said, okay, I'll take it. Fine, sure. So I immediately signed up, and then the sign up window was closed just like that. I don't know how much money I'm getting. I have no idea. I'm supposed to find out any day now, which is kind of exciting, but go ahead and start doing business with the USDA, because there's going to be other little programs and subsidies that are going to get passed by Congress, and somebody's going to get that free money. It may as well be you. Okay, so this program is the Marketing Assistance for Specialty Crops. They're calling it MASC as the acronym. This is the program I was just talking about that had a short sign-up window where it opened up, got one email, I was able to sign up. It was, super easy. I think I had to sign like one document, a couple signatures or something, and poof, I guess I'm going to get some money here shortly. But here's what this program is called. It's called the Marketing Assistance for Specialty Crops program, and it provides financial assistance to specialty crop producers to help them expand domestic markets or develop new markets for their crops. So basically, the government's giving me money to advertise my business, which is very nice. I don't know what I would even do with that kind of money as far as marketing goes, but I'm sure I can find a place to spend it. Says MASC helps specialty crop producers offset higher marketing costs related to perishable crops. That's not going to apply to us. Specialized handling and transport equipment with temperature and humidity control. Packaging to prevent damage. Moving perishables to market quickly. And higher labor cost. Okay. Well, that's pretty handy there too. So I guess if you have employees, I'm assuming this is... And I don't know this stuff, okay? Like, I just signed up. I'm kind of reading the form here for the second time. I just signed up real quick. Higher labor cost. I wonder if that means I can pay employees with this money. I'm going to figure that out. It says who is eligible. MASC covers the following commercially marketed specialty crops grown in the U.S. Honey is the one that's going to apply to us. There's a bunch of other ones. Eligible producers or legal entities must have an average adjusted gross income of less than $900,000 per year. Well, you'd have to be a pretty good, for tax years 2021, 2022, and 2023, okay. So you've got to be grossing close to $1 million to not be eligible for this thing. There's a lot of, could be a U.S. citizen, a lot of just silly requirements there that people are going to meet. Yeah, here was the sign-up date. It signs up. This program opened up on December the 10th, 2024, and the deadline was January 10th, 2025. So you had exactly 30 days to sign up for this thing, and that's how short they are. That's why you want to go ahead and talk to the USDA and get on their email list. Shoot, by the time you see that email, remember to submit everything, get your stuff together. That window was going to pass. It'll pass pretty quickly. So yeah, you had to submit some forms. Program payments. The Farm Service Agency will issue MASC payments after the end of the application period. That period has now passed. If demand for MASC payments exceeds available funding, MASC payments may be prorated. That's why I don't know how much money I'm getting. I called my local branch just a couple days ago. They didn't even know how much we were getting because they had to know how. I guess Congress just kind of earmarked X number of dollars. I don't know how much to be passed out for farmers, and depending on how many people sign up in that 30-day window, they're going to have to kind of divide it up, and I'm sure there's some other ways they're going to, decide who gets what. So nobody really knows who's getting anything. Payment limitate. The payment limitation of $900,000 might be lowered if too many people sign up for it. So that's crazy. If additional funds are available after MASC payments are issued, the FSA may issue an additional payment. So if a lot of people don't sign up, they're just going to send you more money. This is the kind of stuff you really got to sign up for. And I don't know, maybe $500, maybe $20. I don't know. It could be several thousand with these guys. You just don't know. But what did it cost other than some paperwork? And I know some people don't like signing up for these grants and subsidies because they're like, I don't want government help. I don't want taxpayer money. Blah, 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 blah. I mean, look, man, somebody's going to sign up for it. I'm signing up for it. It's your personal decision. I will say there's a beekeeper in my area who's a really great guy. And I've tried to talk to him because he's trying to he's kind of a sideliner. He wants to be, mostly full-time doing it. And he will not sign up for Elap or NAP or anything like that. And because he's a libertarian and, he doesn't want to receive taxpayer-funded anything. And I respect his integrity. And if that's your way to do it, so be it. Go for it. Don't shame those of us who are taking it because I'm not so proud that if there's some money on the table for me to take from the government, I'm absolutely going to take it. whether you sign up for it or not, they're still going to pay it off to someone else. Because you see, like this mask program, if a lot of people decide they don't want to sign up for it because they don't want government money, taxpayer money, whatever, they're just going to give more money to those of us who don't have a problem with it, which is good for me and those of us who are signing up for it. That's a personal decision you can make as an operator. I have no qualms about it, and I just want people to know that it's out there if you want to do it. Okay, so I've covered the kind of government side of things, the microloan, the direct loan, the farm operating loan, Elap coverage, NAP coverage, these really tiny grants that just randomly come out, like that mask program I was talking about. That unfortunately, I'm sorry now, guys, if you're listening to this, has probably closed. Well, it has closed unless they reopen it or do a second round or something. But something to think about. The last thing I'm going to talk about, and I know I literally just signed up for this like couple of months ago. I've only heard about it from other beekeepers. This is my first time. I mean, honestly, I just was reading through this form just yesterday for the first time. So I don't know much about it. What I'm going to do, it's like a 3-page document. I'm going to put it on the screen if people want to see it. And to give you guys an idea of what this program is. I don't know much about it, so I'm just going to have to read off the form. And I'm sorry that it's kind of boring to listen to. But if this program is legit, it's extremely, extremely profitable. So I want people to know this. And I don't think this guy's going to have a problem me mentioning his name. He's on the document. He worked for this company. He used to be a beekeeper here. He was our old state bee inspector. His name was Andrew Finch. He was the bee inspector before we have Jimmy Davis now. After he finished working for the state bee inspector service, I'm guessing he went to work for this company. They're called Wraith, Scarlet, and Randolph, WSR. Anyways, there's a company that, and I'm sure there's multiple companies, this is just one. They cover rain and drought insurance for beekeepers and farmers too. I've always heard the older beekeepers talk about this program. I always thought they were talking about Elap and NAP. For years, that's what I thought they were talking about. I did not know that this was an entirely separate thing. If I understood Andrew correctly, it's a private insurance, okay, to sign up for it, but it's subsidized by the government because when I show you these numbers and I go over these numbers here for this program, you're going to have the same response that I did is if they're giving out this much money constantly, how is this insurance company staying in business, right? You can't have a private company that's losing tens of thousands, millions of dollars, on a regular basis, and stay afloat. And if I understood Andrew correctly, it's just because Congress or government somewhere is subsidizing a lot of these losses for them. So it was like a way for the government to help farmers, but kind of have it under this umbrella of a private organization, if I understood it correctly. And I may be totally wrong on that, so take that with a grain of salt. But I was very skeptical when I first saw this because I was like, how can you give me this much money constantly because it doesn't cost anything to sign up for this program. It's completely free, other than a little bit of paperwork, which took not even an hour to sign up with Andrew. Andrew literally came to my house, had a laptop, filled in some personal information. I think I sent him a couple emails. Boom, I'm signed up. So I'm going to post these 3 pages online. I'm going to read over them. I want you guys to look at this. I don't know. This program sounds too good to be true. I'm still skeptical. I haven't gotten my first payment because I just signed up. I'm going to have to see how it plays out because it seems like an absurd amount of money for me to get for doing absolutely nothing. I definitely take the approach that if something sounds too good to be true, it probably is. I'm a little nervous about signing up for it, and I'll explain that in a second why. But this is something you may want to look at. So that's the name of the company. So it's basically an insurance program. Doesn't cost anything up front to sign up for. There is an annual premium. Your premium and the amount that you're going to get paid will determine on how many colonies you register. Now, just like when you're doing ELAP and NAP, I didn't have to have an official form to say how many colonies I was running. I didn't lie. Andrew said, "How many colonies do you have?" And I said, we top out at 2,000. That's what he put. Heck, I don't know. I probably could have told him I was topping out at 5,000 colonies. What do they know? Nobody's going to go out and count my hives. And I'm not saying to do that because that's lying. That's fraud. Don't do it. It just seems like it's just strange to me that all these companies are just passing so much money around and they're just basing it off my word and no official forms or anything. That's just insane to me. A lot of them will want your like state apiary registration, your certificate that you get when the bee inspector inspects you. At least if you're in a state like Florida where your hives have to be registered. But even that, the bee inspector doesn't go out there and count my colonies either. He just says, hey, Matt, how many colonies do you have? I got 2,000. Okay, boom. And then everybody bases their financials around that document that I just gave some random number out. It's not random. It's the actual number, but I could have given a random number. I find that really strange that all of this stuff is so not controlled. I really find like that's going to be a problem for some people. But anyways, that was enough of my little rant. So anyways, this program covers rain and drought insurance based off, again, how many colonies you're running. So I run 2,000 colonies. That's what I top out at, right? So that's what they're basing all of my rainfall insurance on. If I don't get a certain amount of rain in a year, I just get paid. And because I send my bees to California, they also base my payments off rainfall in California. And from what was explained to me, is that, it doesn't rain a lot in California. So there's a good chance they're going to have a drought. And this is not my actual numbers that I'm putting on screen. This was a 20-year projection that Andrew typed up for me, basing it off where I keep my hives here in Florida and basing off where I keep my bees and, where they're pollinating over near Merced in California. So here is an average of what I could have been making through these colonies if I had been doing this for 20 years. So they've got me listed as my average yearly indemnity. Indemnity is just a kind of a fancy word for saying payout. That's what I would be receiving. I would be getting an average of $38.81 per colony, averaging about $77,000 per year, if I understand that correctly. However, you do have a premium to make, but the weird thing is they take your premium out of your indemnity, out of the money that they were going to give you. So my annual premium for running 2,000 colonies is a little over $33,000, $16.53 per colony. So they'll take my $77,000 that I would have gotten, and that's my average, what I would have made for doing nothing now, just for it not raining. That $77,000, they'll subtract the $33,000, which would give me an average yearly net profit of $44,556, average of $22.28 per colony after expenses. So after I've paid that premium, which I didn't pay, right? I didn't pay a thing. They're just going to take it out of the $77,000 that they were going to give me, and then my company would just get $44,000 per year. It's just insane, and I didn't believe it. I called a good friend of mine who also was signed up for this program, who was also running the same number of colonies I am, or pretty close to it. And he said, yeah, he got like $45,000 last year off this program. Same company. Andrew was the same guy that signed him up. And I just couldn't believe it. And he said the same thing to me. He's like, I can't believe this program exists. And obviously, if you're running 100 colonies or something, you're not going to get that kind of money. But good Lord, that's more money than most people make working a full-time job around here. You just get it. Now, here's the thing. Here's the downside, and this is what was explained to me by Andrew. If for some reason we get a surplus of rain and everything, the whole year we get a lot of rain, and I don't trigger that one of those payouts, here's the risk. I could potentially pay in my premium, which for me at 2,000 colonies would be $33,000. That's the gamble. It's like you got to pay in these huge sums for your premium, but you make so much money in general that you should be covered. Your premium will be covered. You're still going to come out on top. Of course, you could just set aside some of this money and not invest it into the business and to set it back and to pay your premium. But when I was talking to Andrew, he said, honestly, the odds are so high that you're going to get paid and so low that you're going to have to pay that premium that most people just spend it all, which seems a little risky to me. But here's my 20-year projection. So this is if I had signed up for this program 20 years ago. I would have made a $2.35 indemnity, so a payout for every $1 paid in. I would have had 17 out of 20 years with no premium due by the billing date. 20 out of 20 years with no premium due upon completion of the policy, which means I just came out in the positive. So 3 out of 20 years I would have had to pay some of the premium. And it's not necessarily the full $33,000 because they base it off, I think they base this off like every couple of months or something. You get like a little payout every couple of months. If I understood him correctly, it's not like I just get a $44,000 check in the mail or I get a $33,000 bill in the mail. It's split into multiple smaller pay-ins or payouts, which is definitely more manageable because I just don't have $33,000 to pay to drop into anything. I mean, that's just an insane amount of money. So here's my totals for 20 years. My total indemnity, if I had been signed up for this program for 20 years, I would have gross, now this is prior to my premium, $1,552,000, an average of $776.16 per colony. My premium would have been over 20 years, $661,000. And when you subtract your premium from your indemnity, that's a pain in the butt to say, my total net profit for 20 years would have been $891,000, $115, I guess, if you want to go that. Almost $1 million over 20 years. That's like $400-something thousand every decade. That's insane. Would have made an average profit of $445.56 per colony. It seems unreal. And you see why when he presented this thing to me, I was like, this is a scam. There's no way. That's when he was explaining to me, well, it's really kind of a government subsidy under this blanket of a private insurance firm, and it's really there just to keep farmers in business. And it's just based off rainfall. So I mean, it's insane. It's like me being out there and busting my butt in the highs 365 days a year, killing myself, and they'll just give you that almost that same amount of money or something that I could produce in a year or 6 months or whatever. Killing myself, breaking my back. The government's just going to give me that same amount of money and to do the business for doing nothing. I really find it ridiculous, but with me saying that, I have signed up for it and I'm going to take it. I just find it crazy. And that's why I'm kind of erratic about it because I'm still like wrapping my mind around it. And I'm like, is this going to happen? I mean, God, I wouldn't even have to worry about sending those bees to California. I could just sit here and collect a check, which I've always heard is what a lot of farmers do. You know, I've always heard they plant those fields and they don't harvest this, they don't harvest that because all these, the subsidies. Well, beekeepers apparently are getting some of that too. I kind of have a little bit of bitterness and resentment in my heart for my last couple of bosses who knew I was starting my own apiary, didn't just pull me aside one day and say, "Hey Matthew, there's this program. You need to sign up for it." And, I would have had $500,000. I mean, I didn't have 2,000 colonies back then, but, I would have had hundreds of thousands of dollars more in the business if I had just signed up for this thing. But they never did tell me. I heard them mention once or twice about this rain insurance, but never just said, "Hey, Matt, call this dude. He's going to take care of you." And the only reason I even knew about this is because Andrew called me, because he knew me, because he had registered my hives all these years ago. And I put some hives on a property of a guy that he was friends with, and I guess they were talking, and it made Andrew think to call me. If Andrew had not called me, I would never have signed up for this program, ever, because nobody took the time to tell me about it. And that's why I wanted to make this episode. And I know it's a lot of numbers, and I'm rambling a lot and all this stuff, but I just want people to know this stuff is out there, because nobody took the time to tell me. And I'm really aggravated that I could have had these extra income coming in from years ago. So I'm not going to read all this because it's a lot of numbers, but they break down the amount of rainfall in the counties, like my county, Washington County, or over in Mercer. I find it kind of crazy too that they count rainfall when my bees are just out there pollinating the almond orchards for just a month or two. But whatever. I'll put all that on screen so you guys can read it, and that's really it. I'm trying to think of everything I covered now. I've covered the microloans, the direct loans, the farm operating loans, the Elap program, the NAP program, the mask thing that unfortunately is closed. Now I've covered this private rainfall insurance. Andrew's information I think is on that form if you guys want to call him. I'm sorry, Andrew, if you didn't want me to give that out publicly, but he works for them. I don't think it's going to be an issue. Look at all this stuff. I mean, there's a lot of money out there. I'm trying to learn more about these grants and subsidies myself. I'm not an expert on it. These are just the ones that I've got some personal experience with. And I just want you guys to have that information available, like I did. That there's some of this stuff is just not really out in the public eye enough, I feel like. So that's all I've really got, I think. There's a ton of like minutia I didn't go into with the Elap program. There's a lot of little nitpicky stuff they're going to want to have in the NAP program and the loans. But you just need to contact your local USDA office and reach out to the Farm Service Agency branch of the USDA. And they're going to have like a loan department and on one side of the building, and they'll have like a program department that's going to be Elap and NAP on the other side of the building. There's one here in Bonifay. If you're local, you want to contact those people, do it early because, like I said, they're great. I love them, but they're slow as dirt and they're closed all the time. If there's any kind of federal holiday, they're out. If they can leave the office early, they're going to leave the office early. It's very frustrating. I guess that's just the government, but hey. It is well worth the headache because of all the free money you're getting. So that's it for this episode of the Pollination Podcast. I think this is episode 20. I believe I said I've already kind of forgotten where I'm at. I hope you guys find that interesting, or maybe not interesting, but at least useful. It's practical information. I'm sorry I'm kind of like, I almost could have made an episode about each one of these programs, but that would have taken forever. I just wanted to cover the general stuff. End of the day, go talk to the USDA. Talk to one of these private insurance firms for the rain drought insurance. Andrew's company there is the one I just signed up for. I'll update down the road and see how these things played out for me. And make sure they're not a scam or anything. Do your own research. I only have a limited experience with some of these things. So, and that's it, I believe. So thanks so much, guys, for listening or watching. And I'll hope to see you soon. Thank you so much for joining us today on the Pollination Podcast. I'm Matthew Walker from Walk in the Woods Apiary. We hope we have answered a few of your beekeeping and pollinator questions. Please share your questions and comments to our Facebook page at the Pollination Podcast.